Hey guys, how is it going today? And in today's video, I'm going to be going over the top 10 ETFs for dividends on Robinhood. That being said, I'm going to roll right into it, and I'm actually going to now pan it over to my computer screen. So the first one we have is going to be the PowerShares S&P 500 High Dividend Low Volatility ETF. Now, if you look at this ETF, you can tell that it had a very large downfall whenever the entire COVID thing happened, and that it still hasn't fully recovered. That's why I think it's a pretty good price point to buy in at. Also, if you look, the dividend yield's 5.5%. So it's got a pretty good mix. I personally own SPHD, which is the ticker symbol for this, and it's basically a weighted index comparing the 50 least volatile names compared to the S&P 500 75 highest dividend paying stocks. So it's going to choose from the highest dividend paying stocks, but it's going to choose the 50 most, the 50 least volatile out of those stocks, if that makes sense. So you get a pretty good balance. You can guarantee pretty good dividends without knowing the company is like a sketchy company, you know. That's all there really is to SPHD. It's just like a pretty good overall ETF if you're trying to build dividend income and you want something stable. So I have a little bit in my portfolio just for the stability reasons. Rolling right into the next one, it's going to be Vanguard's High Dividend Yield ETF. Now, this ETF, it doesn't necessarily have the low volatility aspect to it like the SPHD does, but it is a high dividend yield ETF, so it's basically just like the highest dividend paying companies, U.S. companies that is, and it's essentially just that. It's and when you're buying an ETF, you're getting a bunch of different companies within the same fund, so that alone diversifies your investment. And if you look at the chart, you can kind of tell that it's been growing the past 5 years up until COVID, and it's at $80 right now roughly, and before COVID it was trading between 85 to 90 on any given day. Now I don't know if you're going to sell this or not, if you just want to pick it up for a discount, but me personally, I'd look into picking this up for a discount, just since the price right now is around $80, and that's not too bad. I could see myself holding on to this for quite a long time, and if you're looking to build dividend income, then this might be a pretty good ETF to go with. I'm not saying this is like the best ETF to put your money into, but I think that you can get some pretty good use out of it, especially with the fact that the dividend yield is 3.67%, and it's only been growing. So on top of capital gains, you're getting a pretty decent dividend. The next one we're rolling into is PowerShares High Yield Equity Dividend Achievers Portfolio ETF, which is only about $14.64 a share right now, which isn't too bad. I tried to get these all on. I made this video with the ETF prices all being under $100, because me personally, starting out, like whenever I was just starting to invest and I wanted to get into some ETFs, I really didn't want to spend like $160 on a single share, or even higher, $300-$400. So I wanted to provide some good dividend paying ETFs without breaking the bank, that is. So anyways, the gist of this ETF is essentially it's a fund that tracks companies that have increased their dividends for 10 plus years. And if you look at the chart, it was growing pretty steadily up until COVID. And that's the case for most of these, is everything's kind of down because of COVID, which is also why I took this time to make this video, because if you got cash right now, then you can essentially buy in for really good prices and get pretty solid returns a couple years on down the road. It runs you about $14.64 a share right now, and before COVID, it was trading between $17 and $18. And a couple years ago, like the last time it was at this price, it was about 2016, with the growth each consecutive year, after that. So I don't think it's a bad ETF to go into, and I would consider putting it in my portfolio. There's some other stuff that I'm looking into getting into, so I don't know if this would be like tailoring to my needs, but it definitely looks like a pretty solid ETF for dividends and growth overall. That being said, this is SPDR S&P Dividend ETF, so it's going to take the companies. It's like the last one. It takes the companies that have increased their dividend yield for 20 plus years, and it puts it all into one ETF. So the ticker symbol is SDY. The price of it right now is $91.67, and as to regards is what it was trading before COVID, it was around $100 to $107. So it's really not too bad of a price point at the moment. And I think that since the companies have been increasing their dividends for at least 20 consecutive years, that kind of speaks for itself. It shows stability. even though the dividend yield is only 3.08% on this, I think that there's a good opportunity to pick this up for a good price, just because the companies are pretty safe companies that have increased their dividends for 20 plus years. Now this is, I mean, you can always go in and buy the individual companies that have increased their dividends for 20 plus years, and I've talked about those on another video. You know, Coca-Cola, AT&T, 3M, all these companies that are dividend aristocrats. They have been increasing their dividend for such a long time, but essentially this fund just goes and puts all those companies into one ETF. The next ETF we're rolling into is DGRO, which is iShares Core Dividend Growth ETF, and it's essentially a ETF that is handpicked, and it's sorted out by the dividends, the dividend growth, the payout ratio, and then it's weighted by dividend dollars. So like the price of the shares, it weighs it all out and puts it into one nice little fund. Personally, I wouldn't look into getting this. I just put this on the list because it's like a pretty stable stock. The dividend yield's not insane. It's only like 2.6%. But I think it's a good honorable mention just for the sole fact of like it's pretty stable, and the growth on this has been really solid. Like if you look at the chart over the past like 5 years, I mean it's looking really pretty before COVID. So it's something to look into if you're looking into something that's probably going to grow over time as well as provide decent dividends, you know. So that being said, the next one we're rolling into is going to be ProShares S&P 500 Dividend Aristocrats ETF. And like I was saying about the Dividend Aristocrats that are really popular, I mean, they're just tanks. I mean, these companies are set up really well. You know, their dividends have been increasing for so many years, and they just pay out good prices. I mean, if you look at this on the 5-year chart, it was also growing quite a bit up until COVID, and it's at a less attractive price point than some of these ETFs just because it's recovered a lot more. But the dividends aren't, I mean, they're not insane, but the fact that these companies are like the safest companies in the world, this could definitely be an ETF that you could get into if you were looking for more stability, especially considering that, you know, it's only $68 a share, which isn't the cheapest, but by no means it's the highest. I mean, even if you have a low amount of dollars in your account, you might be able to get like one or two of these just because like that's not that bad. Rolling into the next is going to be Vanguard's Total International Bond ETF. And you might be thinking like, why do you throw that in there? Well, I'll show you why. It's because the dividend yield is 3.3%, and over the past 5 years, and it's just been stable growth. I wanted to throw some bonds in here just because I don't want to just do ETFs on all stocks. You know, I wanted to diversify and do a little bit of, you know, bonds and stuff on here. I should have done a REIT, but, you know, that's kind of, I didn't really want to do a REIT, to be honest, because of the volatility of it and all that. But I did throw this bond ETF in, and I think it's pretty solid, to be honest. I mean, I think it's not at the most attractive price point at the moment, but I do think that it's going to see steady growth as time goes on. That being said, the next one, which we're in our top 3 now, we got the ETF SRET, which is Global Super Dividend REIT ETF, and yeah, I mean, I didn't want to put like a REIT ETF in here that was like just a REIT itself. But, you know, I think this one is not too bad. The dividend yield's like 13.8%. And like I was saying on the last symbol, I was really contemplating putting a REIT in here. And the only reason I did decide to was because on this ETF, it's like it tracks 30 high yield, low volatility companies. And so I don't think that, I mean, anything that's cap weighted with like low volatility, I think is not too bad of a choice. And the fact that the dividend's like 13.87% because it is a REIT, and legally REITs have to pay 90% of their earnings to shareholders. You know, I just threw this in the mix just because it's another option. You know, it's not just a stock or a bond. You got a real estate investment trust in here now. This next one's going to be one that I've personally traded quite a bit, and to be honest, I've got burnt out on it. You know, I've traded it a decent amount, and over the past 5 years, the growth just hasn't been there, even though the dividend's like 12%, which is by the way, it's SDIV Global Super Dividend ETF. And to be honest, it's just, I bought this when I very first started getting into investing because I saw like super dividend and I was like, oh my gosh, that's going to make so much money. But little did I know, I mean, the ETF has been on a decline for, you know, the past 5 years, and now they're even lower because of, you know, the whole COVID thing. The only reason I did put it on this list is because since they are down because of the COVID thing, it might be a good opportunity to pick some up, even if it bounces back a little. You know, the dividend is high, so in the meantime, you'll be able to pick up a little bit of cash from it. But I don't know. I just had to throw it in here. I've had so much. I've dealt with this ETF quite a bit, so I just decided to throw it in here. And a lot of people do, because on Robinhood, 10,350 people have it, which is not a small number for like just a random ETF. And this one is one more REIT fund. It's Vanguard US REIT fund, as opposed to like an international REIT, which we had earlier in SCRT. This is like the US REIT fund, which is basically just the US market of real estate. And the reason I put it on here is because I think that it's a pretty decent price point right now, just because of the price that it did get to before COVID, and the dividend's not insane. But with that being said, I do think that this is a more stable stock, and I just think that if you dollar cost average this REIT throughout time, then you'll see decent returns just for the sole fact of real estate. I don't think is going anywhere in the U.S. That's me personally, because I do live here. I think that it might go down in the next 5 years, but I think like in 10 years it's going to be right back up to where we are, or like that kind of thing. I think it will go down like maybe even 20%, 30%, but I do think that it will go back up over time, just because people do buy houses, people do move, and land something that's just sought after. With that being said, those are going to be my top 10 dividend ETFs. Some of these were good choices, some of these were bad choices, but I put my insight on the ones that I did choose, and I talked about why I thought they were good or bad choices. Now, do I recommend every single one of these these ETFs at the moment? At the moment, probably no, but I would single-handedly say that these are all pretty solid ETFs if you were looking into to invest into more ETFs. With that being said, I really hope you enjoyed the video, and I've kind of got a new style of video going because I got the face cam going and I got the screen recording going, so it's pretty exciting. Let me know how you like it down in the comments below, as well as the normal, let me know what you'd like to see in the next video, as well as like the video if you enjoyed it. That being said, I hope you enjoyed the video and have a good day.